Picture this. Your car breaks down, or an unexpected medical bill lands in your lap, and you're left scrambling, stressed, with little to no cash to cover it. What if you could avoid that with a simple financial move? Welcome to Money Pulse, where we make your money work smarter for you. Today, we will be breaking down why an emergency fund is a must-have in 2025 and giving you a step-by-step plan to build one, even if you're starting from scratch. Stick around because this could save you thousands. Introduction. At Money Pulse, we're all about giving you clear and actionable advice to take control of your finances. In 2025, with all the rising costs, economic shifts, and life's unpredictable surprises, an emergency fund is your ticket to financial peace of mind. In this video, we cover why you need one, how much to save, and a foolproof plan to build it, no matter your income. Plus, we've got insider tips to make it easier than you think. Grab a pen, hit that like button if you're ready to level up your money game, and let's dive into the pulse of smart saving. Section 1. Why you need an emergency fund. Let's start with why having an emergency fund is non-negotiable. Imagine your fridge dies, costing $800 to replace, or you face a sudden job loss with rent due. Without an emergency fund, you're forced to max out on a credit card, borrow from friends, or dip into your retirement savings. All stressful and costly options. An emergency fund is your financial safety net, a dedicated stash of cash for life's curveballs. Think medical emergencies, car repairs, or unexpected unemployment. In 2025, with inflation still pinching at wallets and global markets fluctuating, this cushion is more critical than ever. Here's why it could be a game changer for you. 1. Stress relief. Knowing you've got money set aside for emergencies means you can sleep easy, no matter what life throws at you. 2. Debt prevention. Without a fund, you might lean on credit cards with sky-high interest rates. We're talking 20 to 25% in 2025, which is undoubtedly a debt trap you don't want. 3. Protect your dreams. An emergency fund keeps you from draining savings meant for big goals, like buying a home or building wealth. 4. Job security buffer. If your income takes a hit, an emergency fund covers essentials while you regroup. If you need a wake-up call, here's one. A 2024 Bankrate survey revealed 56% of Americans couldn't handle a $1,000 emergency without borrowing or selling assets. Let's make sure you're not in that group in 2025. Now that you know why an emergency fund matters, let's talk about how much you should save. Section 2. How much should you save? It is important to understand that the size of your emergency fund depends on your lifestyle and needs. Here's a clear guide for 2025. Starter fund, $1,000 if you're new to saving, aim for $1,000. This will cover for small emergencies like a minor car repair or an unexpected vet bill. Perfect if you're tackling debt or on a tight budget. Standard fund, 3 to 6 months of expenses for most. The sweet spot is 3 to 6 months of essential living expenses. Rent, utilities, groceries, insurance. For example, if your monthly bills total $2,500, aim for $7,500 to $15,000. Advanced fund, 6 to 12 months if you're self-employed, have a regular income, or work in an unstable industry. Go for 6 to 12 months. This extra buffer is important for freelancers and small business owners. To set your target, you will have to calculate your core monthly expenses, skipping luxuries like dining out or streaming services. For example, if your essentials are $3,000 a month, your goal is $9,000 to $18,000. In 2025, with costs like rent and groceries still climbing, start small if the big numbers feel intimidating. Even $500 is a solid foundation. A personal pro tip. If you have dependents or an unstable job, aim for the higher end. If you are single with a steady paycheck, 3 months might do the trick. Got your target? Great. Now let's get to the fun part. How to build your emergency fund in 2025. Section 3. How to build your emergency fund in 2025. Building an emergency fund doesn't have to be so hard, even when you're stretched thin. Money Pulse has you covered with 5 simple steps to make it happen. Step 1. Set a specific goal, pick a clear and realistic target, like $1,000 in 6 months. Break it down. That's $167 a month, or about $42 a week. A specific number will keep you focused and make saving feel doable. Step 2. Use a separate high-yield savings account. Keep your emergency fund separate to avoid spending it. In 2025, high-yield savings accounts are your best friend, offering as high as 4 to 5% interest rates at banks like Ally or Marcus by Goldman Sachs. Your money grows faster, but you make sure it's accessible without being linked to your daily checking account. Step 3. Automate your savings. Set up automatic transfers to your emergency fund every payday. Even $25 a week adds up to $1,300 in a year. Automation takes the effort out. You can't miss what you don't see, they say. Step 4. Trim small expenses. Check your budget for small cuts. I could skip one takeout meal a week, which is $10 x 52 weeks equals $520 a year, or cancel and use subscriptions. Apps like Rocket Money can help you spot those leaks in 2025. Redirect every penny to your fund. Step 5. Boost your income. If your budget is really tight, try a side hustle. In 2025, options are endless. Deliver for DoorDash, sell clothes on Poshmark, or freelance on Fiverr. An extra $100 a month can cut your savings timeline in half. For example, a Money Pulse viewer started pet sitting and saved $1,500 in just 8 months. Here is a bonus tip. Windfalls like tax refunds, bonuses, or birthday cash. Funnel at least half into your emergency fund. It's a fast track to your goal. You're on your way to a solid emergency fund, but let's make sure you don't trip up. Section 4. Common mistakes to avoid. Here are 3 very common mistakes to dodge. I even fall short sometimes. 1. Spending on non-emergencies. Your fund is for true emergencies, not a new gadget or a weekend getaway. Stay disciplined. 2. Mixing of funds. Don't keep your emergency savings in your checking account. It's too easy to spend. Use that separate high-yield account. 3. Forgetting to rebuild. If you tap your fund for an emergency, make a plan to replenish it ASAP. If you can avoid these, your emergency fund will stay strong when you need it most. That's the Money Pulse Guide to building your emergency fund in 2025. You now know why it is essential, how much to save, and a clear plan to make it happen. Start small, stay consistent, and enjoy the confidence of being prepared for anything. If this video helped you, smash that like button and subscribe to Money Pulse for more no-nonsense money tips. Hit the bell so you never miss an upload. Thanks for joining us, and we'll see you in the next video to keep your money pulsing strong.